Today is the 22nd of July, 2014, and this is episode 129. This program is intended for informational and educational purposes only. Cryptocurrency is a new field of study. Consult your local futurist, lawyer, and investment advisor before making any decisions whatsoever for yourself. Welcome to Let's Talk Bitcoin, a twice-weekly show about the ideas, people, and projects building the digital economy and the future of money. My name is Adam B. Levine. I'm the editor-in-chief here at Let's Talk Bitcoin, and today we're going to think different. Daniel Larimer, CEO at Invictus Innovations, recently joined all the hosts of LTB for a deep dive into their just-released Bitshares X platform. We talk delegated proof of stake, 10-second confirmation times, their new Titan technology, and the tyranny of the code. The Magic Words Listen to Rewards program is in full swing and going great. Listen during this episode for the magic word, remember it, and visit letstalkbitcoin.com. Log into your account, and on your dashboard you'll see where to use the magic words. Keep your ears open. But first, we're a few weeks into the LTB coin experiment, and since things have gotten started, I've come to some surprising realizations that I'd like to share with you. I'd like to tell you about Doge Party. Most coins are valuable because of the network that uses them, and then attempting to bring in service providers who will accept it, thus giving utility to the coin and therefore value. Here at LTB, we've been thinking about this a lot, and recently rolled out our crypto rewards platform, LTB Coin. The too long didn't read version is, we reward people with LTB Coin who make what we're doing better or more fun, and they can use it to compete with others for sponsor airtime in the Let's Talk Bitcoin show, and in the near future, the entire network of shows and blogs. On July 4th, we sent out our largest distribution so far. 419 registered and configured users split 1.7 million LTB coin proportionally, based on their contribution. It went great, and the response has been amazing. Turns out when you give people something for free, like for something they were already doing but not being rewarded for, they really enjoy it. But there is a problem. Because LTB coin is built on Counterparty, which is built on Bitcoin, every single time we send LTB coin to a user, which we're doing weekly, we need to pay a Bitcoin fee. To perform those 419 cents cost a little over 0.05 BTC, which at current rates is worth about $31 or 7 cents per person. Don't get me wrong, that cost is fantastic when compared against any non-cryptocurrency solution. And of course, we're actually using artificially lowered fees, about a quarter of the standard Bitcoin fees through a script that the XCP devs gave us. But that'll only work until more projects start pushing volume through Counterparty. And on that subject, while Bitcoin is also insanely fast when compared against conventional financial options, it turns out there's quite a bit of variance in block times. The 10 minutes is an average, but blocks sometimes are found seconds apart, while other times an hour will pass without a single block being found. Because each action in Counterparty, whether a send, creation of a new token, placing an order on a decentralized exchange, or using the prediction market, every single action you perform must first be included in a Bitcoin block before it actually happened. You've never felt how slow the blockchain can be until you're waiting for an hour to confirm a market order. What we need is an alternative, something cheap and plentiful and fast. And turns out there are actually quite a few good options out there that meet the need, but my favorite by far is Doge. Doge is an interesting token. It started off as a joke that exploded in popularity and has found its place as a kind of ad hoc charity coin. Whatever the need, Doge is there ready to put their money where their collective mouths are. Although it's not one of the more expensive tokens, Doge is actually one of the largest crypto coin communities, and certainly one of the most vocal. If value is a language, Doge is a very commonly spoken tongue in the world of crypto. So, when Wendell Davis from Hive and Human asked me what I thought about putting the Counterparty protocol onto the Dogecoin blockchain, I was pretty intrigued. With Bitcoin, we see about 1,000% variance in block times, ranging from over an hour, like I mentioned, to under a minute, from that 10-minute average. With a 60-second block time, Doge is just about perfect. If it has something like that same 1,000% variance, you've got a max time of 10 minutes and a minimum time of 10 seconds. From a user experience standpoint, I think this is order of magnitudes better. But the cost is where my jaw just dropped. Doge is currently trading at around 36 Satoshis each. The dust limit for Bitcoin is several thousand Satoshis. So this means that if we paid even one full Doge per transaction, and the default fee in Doge is 0, our cost for the entire 0.05 BT transaction would have been 0.00015 Bitcoin, or 331 times cheaper. So Doge is 10 times faster, more than 100 times cheaper. What's the downside? First, it has block orphans. Just like in any other network, when a miner finds a block, they race to announce it to the network and claim their reward. faster blockchains have more orphans, so you need more confirmations in order to be sure that a transaction actually happened, and you're not going to see a fork, 5 blocks on down the line. In practice, it means that you can wait for 10 confirmations to be as certain as you are with one Bitcoin confirmation, although this is sort of a funny way to say it. Doge, fundamentally, at this stage, is probably not secure. But putting a value layer on top of it like this might actually solve that problem. Right now, Doge is trying to solve a problem that a lot of people consider already solved. Bitcoin is already good enough. 10-minute transactions, it's 7 cents. Who really cares if you're just a normal user? But when it comes to creating new tokens, to do innovative things, or even just to play games, we're playing with a lot of puzzle-type things, where you have a token that will act as a key that then, when you possess it, actually shows you things that if you don't have that token, you wouldn't see. So there are all of these non-monetary ways that I'm very interested in developing cryptocurrency technology, and if we do it on Bitcoin, then first off, we need to junk up the Bitcoin blockchain, and secondly, it's much more expensive, 330 times more expensive in the example that we used. So if we were talking about a money transfer, this would mean you need a bunch of confirmations, 10 confirmations plus. But the view is very different when you're talking about a counterparty layer. Here, orphans don't really matter at all. If your order or asset didn't get included in a real block, well, it's still out there. The network will just keep trying to place it until it does so. And because the time between blocks is so much shorter, you're going to get real and meaningful feedback in a much faster way. Even in Doge, the majority of blocks don't orphan, and so in a normal scenario, you're looking at a 1-minute response time, and in an extremely bad scenario, you're looking at perhaps a 30-minute wait time. Compare that against Bitcoin, it's really no contest. LTB coin is not moving to Doge. Yet. But as I've always said, LTB is focused on solutions in the new digital economy much more than we are about rah-rah, let's all be rich with Bitcoin. If there's an obviously better solution out there to accomplish a given task, we're going to use it. But the Doge Party isn't going to wait for us. It's going to happen pretty much right now. So I'd like to introduce to you Doge Party. Doge Party is the open source counterparty protocol adapted and applied to the Dogecoin blockchain. That means you can easily create new crypto assets with it, use its full P2P decentralized exchange, use it with feeds for a decentralized prediction market, group chat, and it's also one of the first multi-token wallets out there, and so would be the first multi-token wallet available on the Doge platform. With Doge Party, anybody will be able to create a new token that rides on top of the Dogecoin blockchain for whatever purpose they desire. You could create a crypto rewards program like LTB coin. You could create a charity token that's given out to those who donate to your cause. You could create a game token that's awarded to the winners, and a little bit to the losers, of your challenge. You could create a reputation coin that you create few of and give out only to those you trust. Whatever you can imagine, you can do it. And it's going to get more interesting than this. Next week I'm going to be releasing a paper on token-controlled viewpoint that basically describes how you can use this type of asset built on top of another coin as a way to gain access to information that you otherwise don't have access to. So it's a way to have a website that could have, hundreds of versions, and people who have different tokens visit the page and see different things relative to what types of tokens they have. So again, it's a very nascent concept, but it's so much more feasible if the cost to do it is basically nothing. And with Doge, that's really what we're looking at. The cost is basically nothing. Whatever you can imagine, you can do it. It doesn't require mining or you worrying about the security of the network. All you have to do is think about what you want to accomplish and then use this versatile toolkit to make it real. But there's one more thing that we need to figure out, and for this, we'd really appreciate your help. In order to do these advanced things, we need to create a new token, the first token. Counterparty has a token called XCP, which was created and assigned through the process called proof of burn. Burn address is an address you can send crypto to, but whose private key can never be known because it's too challenging to solve. Through this process, about 2.5 million XCP were created when 2,100 Bitcoin were sent to the one counterparty and then followed by a bunch of X's within their 30-day burn period. Initially, I thought that this was wasteful because obviously it would have been better to have the funds with which to develop the project, but it wasn't long before I was struck by how drama-free this method is. It's really fair. NXT did something similar, but the problem was a lack of trust in an anonymous developer with a speculative project, so participation was incredibly low. Less than 100 individuals with the, quote, raise of 21 Bitcoins, or 1% of XCP's total. This isn't to denigrate NXT, merely to show the differences between participation in a project where money is being given to someone anonymous, which thus requires trust that that person won't run off with the funds, compared to the money itself being destroyed. XCP also distinguishes itself by not having any sort of founder allocation or pre-mine. The founders and developers of XDP have what they have because they burn their own Bitcoins. It's a way of definitively saying we're all playing by the same rules, and if we succeed, we all win, and if we fail, the developers don't gain from their failure. The lesson I take from this is that trust is an important factor. The incentives for all the parties need to be aligned. There is another path, though. While proof of burn is fair, it actually is sort of wasteful. Even if you're not giving them to the development team because, for example, you don't need much in terms of development funds, there are many ways it could be used to make the world a little better, and so we've come up with an alternative for you to consider. Proof of charity is a burn that can still do good. To create XDP, the token for the Doge Party platform, instead of sending your Doge to an unspendable address, you would send it to a multi-sig address that requires all of the key holders to sign off in order to release the funds. This wouldn't happen until after the XDP generation process is complete to prevent recycling of tokens through the system. This is our primary concern. During this period, we would enlist the Dogecoin community, specifically on Reddit, to help us find and vet charities who would participate in the Doge proof of charity, and ones that find a measure of popular support would be entitled to an equal share of the Doge collected via this method. It's important that the key holders are diverse, so again, we'd like to ask the help of the community with this. Our proposal would be one key holder from the Dogecoin dev team, one picked by the Dogecoin community, and then I'll raise my hand here as the third key holder since I'm not really involved with Dogecoin too much and I have a bit of reputation to lose, but if the community has a better suggestion, then I would happily not have the responsibility. So really at this point, we can go either way. This launch is happening next week. So please join the conversation as soon as possible. You can see all of the relevant links over at dogeparty.io. That's dogeparty.io. So what do you think? Charity or burn? Join the conversation now at dogeparty.io. My name is Adam B. Levine, and I'm here along with the other hosts of Let's Talk Bitcoin, Stephanie Murphy.
Hello.
And Andreas M. Antonopoulos.
Hello.
Today at Let's Talk Bitcoin, we're joined by Daniel Larimer, CEO over at Invictus Innovations and the guy behind the Bitshares project. Daniel, how you doing?
I'm doing great. It's exciting to be here again.
So it's been about 6 months, I guess, since we've had you on the show. Before we get into what's going on now, can you kind of give us a recap on your last 6 months of process with this project?
Bitshares is all about doing decentralized autonomous companies or making blockchains that are profitable. With our flagship concept, Bitshares X, which allows us to create BitUSD, which is a cryptocurrency that is market pegged to the value of the dollar and otherwise has the properties of Bitcoin. And that's sort of where this entire project started. Over the past 6 months, we have been trying to find a solution to proof of work, proof of stake, basically the consensus problem that is efficient and will scale. After our experience with proof of work showed that it resulted in centralization. The miners on our early network of ProtoShares they were not including transactions. We've had a lot of issues with proof of work. So our project was set back by a couple months while we invented two very critical technologies. The first is delegated proof of stake, and the second is Titan, which stands for transfer invisibly to any name. Combined, this allows us to have the transaction speeds of Ripple without the centralization of Ripple.
So that sounds pretty good. What is the downside?
As far as I can tell, we found the best compromise of all the different technologies out there.
Well, so what was the problem that you were trying to solve? Because proof of work is something that's been in place for quite a while, and a lot of people think that it's pretty much the legitimate way to do these distributions. So you started off with a proof of work system back in, I guess, November. Can you talk about, you said that people weren't including transactions. Why wasn't it working for you where it has worked for others?
Proof of work is fundamentally economic insanity. It's the idea that we're going to secure the network by burning our money. And whoever is willing to burn the most resources for the least reward gets to control the network. If you own Bitcoin, you have no say over how the network is operated. The miners have complete say over that. And mining is something that's always going to centralize in economies of scale. So we wanted to get away from that. But in order to get away from that, we need to find a new way of both securing the network so that the transaction ledger is unforgeable and irreversible, and deciding who gets to produce the next block and extend the ledger. And there have been various approaches to this. You've got NXT and Peercoin are the two alternatives to proof of work right now. But what we have is delegated proof of stake. And what makes us different is that we use an approval voting. The shareholders, the people who actually hold the coins, if you're a Bitcoin, you're a Bitcoin. If you own Bitcoin, you can be thought of as a Bitcoin shareholder. You get to nominate delegates to produce blocks. We chose the number 101 delegates, and they take turns, each producing a block in turn.
So how is that not centralized?
100 people is a lot more decentralized than Bitcoin, which has 2 people that control 51% of the network. The people that are actually producing the blocks have the approval of the majority of the shareholders. So the only people that can actually be there are the ones that have support from everyone. Whereas with Bitcoin and other proof of stake coins, it's whoever buys into the position.
This is sounding familiar. Calling up memories of a Congress. I mean, what's not to prevent corruption? And once someone gets elected, so-called, why would they not turn evil?
Well, Bitcoin already has the same process. It's called a mining pool. And the miners vote to nominate who the pool owners are. So you already have delegated proof of work, and that's how Bitcoin's working. Next is using leased forging, in which case the shareholders don't forge themselves. Instead, what they do is they get someone else to forge and they give them the kickbacks. The key in these systems is when they run this system, how easy is it to get the bad actor out, and how much damage can they do when they're in there? So you're nominating people with almost no power. The only thing they can possibly do is not produce a block and not include a transaction. They can't change the rules. They don't have arbitrary power. It's really no more power than a Bitcoin mining pool operator has, or a next forging pool, or a large Peercoin shareholder has.
Their power is limited by the Constitution?
The Constitution is the code.
How would you, if you wanted to become a delegate, how would you do that? Or are the delegates already elected, and do they change every so often?
Delegates are changed on a continual basis. You have to maintain continual approval of the users of the system. Every time they make a transaction, the wallet will automatically vote for the delegates that they approve. And only the top 101 by approval get to have an opportunity to produce blocks. And I like to talk about that for a second here, because there is a deep insight that I had just this week, that why is delegated proof of stake more decentralized or better than other proof of stake systems? And it comes down to this. There is a fixed cost associated with validating a transaction and being on the network. And if you're going to scale a network to, PayPal, Visa size, then you're going to have serious hardware in order to participate and actually process and validate transactions. So there's a bandwidth cost, there's a CPU cost, and there's a storage cost for each transaction. Every single validator has to incur all of these costs. So if you have a fixed transaction fee, say 1 cent per transaction, that 1 cent has to be enough to compensate everyone who is validating. What that means is that systems like Peercoin, if they scale up, only those who have a very large stake will be able to participate in mining profitably. In fact, it ends up being so bad that if you have Bitcoin size, you need to have $1 million worth of Peercoin in order to process things profitably. That's based on certain assumptions about the transaction costs, transaction fees, and the costs for validating. But you can plot a little graph there, and what you see is that if you have 10,000 people validating, your transaction fees have to be 100 times higher than if you have 100 people validating. And the lowest possible transaction fee is on the network that has 1 person validating. So no matter what, you're going to centralize in the people, whether it's Next with their forging pools or Peercoin, large stakeholders, you're going to centralize in a handful of people, or your fees are going to be an order of magnitude greater than any other system. So what delegated proof of stake does is it provides the most efficient way for the users to have control over that process and sets an amount of decentralization instead of it being an ad hoc, elite group of people that end up being the only ones that can produce blocks.
A couple of questions. There's an argument that mining pools aren't necessarily centralized, whether you're talking about leased forging with NXT or with, ASICs, because an individual is free to join or leave the pool as they see fit. Even with NXT, as I understand it, the leased forging is like you lease your coins to somebody for the purpose of forging or their equivalent of mining, but they can't spend those coins. Like you're just loaning the forging power to that person. And same with Bitcoin. Like if you have an ASIC miner or something, you can join or leave a pool. So is it really fair to count the pool as an entity and not the individuals that make up the pool?
I'm saying that all these other systems are just a form of delegated proof of stake implemented indirectly. When the miners are delegating their hashing power and allowing a mining pool to produce the blocks for them, but of course they can switch pools. In our case, the shareholders are delegating their authority as a fractional holder in the network to someone to produce blocks on their behalf, and they can change it at any time. So you can think of it as building in 101 mining pools that are automatically rebalanced according to shareholder approval, instead of having to have separate mining pools set up and managed by people.
Okay, I see what you're saying there. What about the approval process? Like, how do people know which people they should approve as delegates? It seems like there's some amount of like lobbying or trust that would have to go on, but like, how do you know if a delegate is good and you want to approve them without knowing who they are or whatever, or do they know who they are?
Ideally, the delegates would be public representatives of the system. Think of it as a way of electing a board of directors of 101 people to replace the Bitcoin Foundation. And these people would be lobbying to get support, right? They're basically advocates for the network. They want to get people to support them if they want to do something. It gives you a leadership community for the system that's more organized than whatever someone decides they're going to set up a mining pool or whatever in the Bitcoin or next world.
So if you want to be a delegate, you essentially have to be a public person?
You don't have to be. You at least have to have a reputation that's earned over time. Now, a delegate's primary role is to produce blocks on schedule and include transactions that have been broadcast to the network at that point in time. And the network automatically monitors the performance of delegates from a technical perspective and can advise users, hey, this guy's not doing his job. Because the only thing they can do to harm the network is not do their job, in which case they're likely to be voted out in favor of someone who will do their job.
What would prevent someone from creating a false delegate? Is there any way someone could do that? Like if they were previously a delegate and they just kind of kept their credentials or whatever, how does that work?
All new delegates or false delegates start off with no approval. So they'd have to go and get the reputation and support of the users. So you can't just create one and get in. You have to get known and get people to give you basically a thumbs up in our wallet. And then you can get in if you are among the top 100 people with thumbs up.
What's the incentive for anybody to care about voting for delegates and checking them out? And it seems like they're doing work to check out which delegates are good. Like, what's the incentive for people to actually do that and screen potential delegates?
This goes all back to the DAC metaphor. And if you view shareholders as electing a board of directors, what's the incentive for shareholders to care? Well, the large shareholders, those who own significant stake, probably care about the network. And they're going to go into their wallet and nominate the delegates that they would like. And if there's any problems, people are going to care. And if the network's not performing, people are going to care. And it's very little work. In fact, we provide URLs, which you can just click on a link and get support. So if you're having a discussion on a forum about some problem, users can just click on it and you add your approval to your wallet. So we're trying to make this as friendly as possible. And of course, users can abstain. Most Bitcoin users abstain, and they're trusting the mining pool operators to do a good job. A lot of people in Next abstain, or they have to select a pool to join. And then how do they evaluate which pool to join? Most of them set it and forget it. So it's really no different than the work that users are already doing, except now there's no need to switch mining pools or pay much attention. So we actually reduce the burden on the users of the system compared to the alternatives out there.
One of the things that's different about your approach from what I'm hearing is that it seems like you've looked at this and basically said that this is what's going to happen anyways, so why not build a system that's going to make it so it happens in a controllable way instead of happening as an unintended consequence? Because what you're saying basically is that all of these other systems have exactly these same issues, they just don't acknowledge them, and thus it's developed in a way that hasn't been good.
You pretty much nailed it. We need to control the centralization and make sure that the users can exercise their influence as effectively and efficiently as possible. And that's all we've really done. And we've acknowledged the economics of the situation, which is that you cannot have 1 million verifiers and scale a network. The transaction fees to do that are going to be extremely high.
Well, so let's talk about Ripple for just a quick second here, because that is the system that this looks most like. And I know that earlier on in this process, you had looked at Ripple. So can you talk to us about how DPoS is different from what Ripple does and why it's more decentralized? Because that was a complaint you had, right?
Right. I looked at Ripple. Hey, this is nice. They produce blocks every 10 seconds. It looks relatively efficient and decentralized until I started looking at what I had to do to implement it. And the best way I can describe Ripple is as if you started out with an initial set of delegates, and the only way to get a new delegate into the system is for the existing delegates to approve them. The people that hold the XRP have no say over who the verifiers are. So it's sort of like an insider's club, and no one can force their way in. XRP holders have no way of getting someone on there. So what we've done, we've selected who that inside crew is through a democratic process on the blockchain instead of an insider elite group.
What do you mean by democratic, Dan? Because, how does someone's amount of stake affect their ability to vote or to make a block if they're a delegate? Does it have any impact? Like the amount of coins that they have?
Not the amount of coins the delegate has, the amount of coins the people who are voting for them have. So every share or coin in the network can vote for or support up to 101 different delegates. You can be a delegate in our system and have no shares at all to start out with if people trust you and you can gain support. And then you can earn income providing a service to the network. Whereas all the other systems require you to have a stake in order to produce the blocks and earn any money. Now, granted, these systems are designed to be as efficient as possible. So at the end of the day, there really shouldn't be very many profits for doing this job. It should basically be whatever the average opportunity cost is in society.
Dan, one of the criticisms levied against Bitcoin has been that early adopters of the technology have been able to amass quite significant wealth, and creating a skewed distribution of wealth in such that it's the 1% of the 1% of the 1% in Bitcoin who hold most of the early gains from mining. And that creates a very skewed Gini coefficient, as it's known, which is the economic metric for, if you like, income or wealth inequality. People use that levy that as a criticism against Bitcoin vis-a-vis traditional currencies, and certainly that has been something worthy of discussion. Now, one of the similar criticisms levied against proof of stake systems is that any such wealth disparity is amplified by a proof of stake system, because then whatever advantage is gained early on in the system then offers additional advantage or magnifies that advantage through the proof of stake system to generate more coins for those who have coins. Essentially, proof of stake is in essence an algorithmic form of the rich get richer. What would you like to say to that particular argument? How do you see that?
Well, for starters, anyone, regardless of how much wealth you have, can become a delegate under my system. You are doing a job, you are performing a service, you have expenses, and you are competing to do that service at the lowest cost. So the holders want to pay the lowest transaction fees, and we only pay out transaction fees right now. Although there are other designs where the delegates can actually be paid through issuance of new shares. But it's not the people that have shares today that get those shares. It's those who can get the most approval. And they get that approval by basically lobbying or campaigning, proposing a budget. I want to fund marketing. I want to fund development. I want to do all these other things with the money that I'm going to be receiving. And if you don't, you get fired and you're out of the job. So we've created a market feedback incentive that doesn't concentrate wealth in the people that already have wealth, but instead allows it to operate like a business where the directors have a job to do. They are compensated for the work they are doing. It's a competitive business. Lots of different people are competing for the same job, and everyone has equal opportunity, provided that they can convince the market and the shareholders that they will do a good job. So it's not an algorithmic way of making the rich get richer like some of the other systems out there.
Let me ask you a follow-up question to that. I understand that the delegates use their delegated power in order to validate transactions and collect fees. But in a delegated proof-of-stake system, how is new coinage generated, and who collects the seigniorage fee for generating that coin? Is that the delegates who generate those coins and keep them, or do those coins go to those who have stake?
Under our system, the default mode is that there are no coins generated outside the Genesis block. We've initialized or recommend that others initialize their Genesis block to give positions to the people who own PTS, which was entirely mined, or those who have donated to fund the development of what we've done as recognition of their donation. And that is a large group of users that's been equal opportunity to participate. So there's no new coins created. Now, if there were going to be, would be issued to the delegates, and the delegates have the option of basically setting their pay. I'm going to take 100% or 0%. And so the shareholders have the power to elect delegates that don't take any pay whatsoever, if that's what they like. We give a lot of power to the users in our system to control both the rate at which delegates are paid and what the funds that the delegates are paid are spent on. So yeah, you could become a delegate. You could operate in new shares are being issued in a slightly inflationary manner. And if you could pocket it all, you're going to be very expensive. And everyone's going to say, hey, we're not getting anything in return for being debased. And then they're going to remove their approval from you. The end result is that the shareholders are actually getting something for being debased in terms of marketing, in terms of R&D, server and infrastructure. Whereas in Bitcoin, the users are being debased and burned on electricity and ASICs.
Well, let me ask you a bit more directly then. It sounds like this is a scheme primarily for supporting corporate governance and the use of such coins for internal use within a corporate environment or within a crowdsourced environment, rather than a broad and generic currency, either on a national, local, or even transnational and global level like Bitcoin. Otherwise, the idea that you would issue all of the currency to a small number of stakeholders right at the beginning doesn't sound like a viable basis for doing a broader currency. So is that the case? Am I understanding correctly that delegated proof of stake is primarily aimed at these types of crowdsourced use coins rather than broad local currencies?
I'd say you got it wrong. It can be used for that particular use case, but it's a way of creating broad, global, distributed companies owned by millions of people that are executing a business model.
Companies, not currencies.
Well, you can think of them as a company. You can think of them as a currency. These are just terms for understanding things. We're basically saying you own a fraction of a system. You own some percent, and the system is doing some service, allowing transactions of some type with certain rules. And that is what the system does. You can use that for a closed group of people, or you can open it up to thousands of people in countries all over the world. So the initial user base is not a small group. I'd say there are probably several thousand people involved, and it's equal opportunity. And there's this concept of early adopters profit and latecomers don't. Well, that's always how it is. The first person to find something before it's valued, they profit when it becomes more valuable. And There's some complaints about that, but that's economics of envy and not based upon economics that actually allow society to grow and prosper.
Well, it certainly sounds suitable for a distributed autonomous corporation, but I can see how this might not be a very popular scheme for use in a broad currency, because this would create a very imbalanced situation for the early adopters, even more imbalanced than some of the claims against Bitcoin. And how do you scale that to 7.5 billion people?
Well, and let me break in here too, because I want to interject. That was not always the plan. The plan was originally that the tokens that were out there, ProtoShares, which was the original token that was released, was supposed to represent about 10% of the total supply of Bitshares. So can you talk about how that changed over time? In addition to Andreas' question.
They're going to represent 50% of the initial supply of the Bitshares X system. They were all mined into existence. But mining is just a way of centralizing in giving your shares to the people who are burning electricity, who are IT experts, or who can get large server farms running. It's not a way of making it fair for the average person. At the end of the day, the average person always has to buy into these systems. And you can have any kind of feel good, don't know what the word I'm looking for here is, but all those ideas, you can't ignore the laws of economics. Can't give people something for nothing and expect to grow wealth. People will end up selling it to someone else and then taking the free money or free wealth that they got and consuming it. So it's really about having the right perspective here. We've eliminated the major barrier to entry caused by proof of work. Anyone can take our source code, start a new group with a new initial base of shareholders under whatever allocation is going to help this thing grow and gain wide acceptance. That's my basic thing is we've removed barriers to entry. We've made it equal opportunity. We've had, of all the different Bitcoin 2.0 projects out there, the longest time and easiest ways to get involved and get your initial stake in what we're doing.
Is delegated proof of stake implemented yet in PTS? Was there a hard fork at some point, or is it this planned for the future?
Right now, we have delegated proof of stake. It's implemented in our test chain, and it's soon going to be launched probably in the next 2 or 3 weeks. It's going to be launched for our Bitshares X chain.
And will people who have PTS have to install a new client? How will that work?
You can import your PTS wallet and your Bitcoin wallet and get your initial balance.
Today's episode, in addition to our LTBC sponsors, is brought to you by CryptoKit. CryptoKit is a web wallet that installs right into your Chrome browser, so it's always there when you need it. It also has an embedded Google Reader that's looking for Bitcoin headlines. Here are the headlines built into the newsfeed on this, the 22nd of July, 2014. Paranoia muddies media's view of Bitcoin potential. Bitcoin prepares for a second coming in India. Meet the high schoolers developing BitCell, the $150 Bitcoin ATM. How New York State wants to regulate Bitcoin. Bitcoin could benefit our customers and taxi drivers, says Halo CEO. Dell jumps on the Bitcoin bandwagon. Glyph iOS messaging app reinstates Bitcoin functionality. All this and more. Check it out at cryptokit.com. KRYPTOKIT.com. Today is the first episode that's brought in more than 100,000 LTB coin in sponsorships alone. The high sponsorship number on episode 129, with 75,000 LTBC, is coinfire.cf. Coinfire.cf is a newer news and opinion site that I'm quietly conspiring to co-opt and move onto the LTB platform. But in the meantime, they're soliciting feedback from users of the site on their experience so far. David had to say, "I'm very impressed with the site and the immediacy of the work being done." Sergio commented, "I really like the layout and how professional you guys are with what you write. They're also running a poll right now. Who influenced you to get into cryptocurrency? Right now it's a tight race between a family member or friend, other, and of course, Andreas M. Antonopoulos. If you'd like to weigh in, head over to coinfire.cf. You'll find the poll on your left." Oh, it's time for the magic words. Today's magic word is Titan. Titan. You've got until Saturday the 26th to visit letstalkbitcoin.com, log into your account, and submit your magic word to claim your share of the community LTBC. The second sponsor for episode 129, coming in with 68,720 LTBC, is Broker.com. I've told you about Broker before. Basically, it's a market that connects people with Bitcoins to spend to those with credit cards looking to buy Bitcoins conveniently. Peter wants a hat and wants to pay in Bitcoins. Lucy will buy the hat for Peter with her credit card. Peter will receive the hat, and Lucy will receive the Bitcoins used to pay for the hat. This is a truly decentralized exchange. And the cool thing about it is it doesn't require person-to-person funds transferred over the internet, which are getting increasingly restricted. The way Broker works is that Lucy pays the merchant with her credit card and Paul sends Bitcoins to Lucy. This is basic commerce. None of that's going to be regulated or restricted at any time, or at least so goes the logic over at Broker. If you'd like to learn more, check out Broker.com. That's BRAWKER.com. Back to the show. I think we've managed to make it all the way through this conversation, mostly focusing on the technology and how it works and why it makes sense, or if it does. And I don't think we've actually talked about what it is that this accomplishes for you. Can you talk about what advantages DPoS has given you and like just, bullet point list, something like that? Now that you have this, what are you doing with it? Because this was a core piece of technology, right? Like you had to stop everything and build this up from scratch.
Right. So what this has given us is 10-second block confirmations that are more secure than Bitcoin after 6 block confirmations. It's given us the ability to have 10 transactions per second in our test networks and to scale in the future to thousands of transactions per second in a controllable manner that maintains the decentralization of the system, maintains the control of the average user over who is running the network. That's the main advantage of the delegated proof of stake system. But that's not the only thing we've been doing. It's just our core consensus technology that gives us the best performance of any system out there.
So tell us, what's the experience going to be like once we can actually use Bitshares? What can we do with it? What is, why is this a product that should be attractive to people who don't already have it and, are interested in Bitcoin, are interested in this type of technology? What about it can they do with that they can't do with Bitcoin?
In our system, we are putting a lot of emphasis on ease of use. And that means that users of our system never have to see a public key or an address like they do in Bitcoin. You send your transfers to a name, so you can register your account. We're going to make all that stuff extremely easy for the users. And whenever you do send transfers from person to person, you actually see who it's to, who it's from, a memo on every transaction, where it looks and feels just like online banking with actual meaningful memos in your transactions. And all that's done while maintaining privacy in a similar way to some of the dark coins out there.
When you're saying that this is something that I can send, so I can just send from Adam to Andreas if we both have accounts here and those are both of our names. If someone looks at is there a blockchain history going on here? Can someone look and can they see Adam sent to Andreas, or are these addresses really, and you're just abstracting it?
Under the hood, there are addresses. It's using a technology or concept called stealth addresses that has been addressed in the Bitcoin community for some time. What we did is we took stealth addresses and made them easy to use by having name or account registration on the blockchain itself. So looking at the blockchain, you never send to the same address twice under the hood. And no one can tie those things together. And in fact, in the more advanced security modes, you can actually send multiple transactions instead of a single transaction, so that you don't end up tying your inputs and your outputs together in a way that can be analyzed, but really good at analyzing blockchains. Yeah, so Titan is transfer invisibly to any name is what it stands for, and that's basically the process I just described. You sign up for the blockchain, you download the wallet, you create an account, you get it registered for free at one or more faucets that may be out there, and once you've done that, you can send and receive or log into websites in a cryptographically secure way, kind of like we had planned for Coyote. So this gives you a lot of those features. And once you've got that account, you can send assets from one person to another. The other thing our system does is it allows user-issued assets. So you could create LTB coin on top of Bitshares X and transfer those between users by name, with all the benefits of Titan, including memos and the privacy and security that you're looking for, in the very easy to use manner, entirely through a web interface.
So is Titan kind of replacing Quixote, or is that still planned to roll out also?
Quixote was sort of based on proof of work, and its security model really needed to benefit from some of the other things we've done. So yeah, the Quixote blockchain is sort of being replaced with the DAC that we create has a name system. And it's sort of like having an email account at Apple or at Google. You have your name at BitShares X, your name at BitShares Vote, or BitShares, whatever the different DACs may be. So that's how we're going to do accounts now, is instead of having one chain with all accounts, you identify the chain and name together.
What about the people? There was a pre-sale of Quixote, I remember, like last around New Year's 2014. What happens to the people who bought into that early?
They're getting their names pre-registered in the Genesis block of every new chain.
Can you explain a little bit more, just maybe again, because Titan is a new concept to me. This is a privacy feature. I mean, it's other things too, but it's a privacy feature. Like, is it definitely private? Like, is it actually anonymous? And how do we know?
It's as anonymous as using Bitcoin with a new address every time you deal with any transaction with anyone. What it does is it makes using Bitcoin in a secure way, because you can actually use Bitcoin today in a private way. It's just a lot of work. It requires you to manually exchange keys and make sure you don't use the same keys multiple times. And if you're going to combine multiple outputs, it's just a lot of work to do on Bitcoin today, though it is possible. So Titan is a way of automating all that and making it easy to use. So you're secure by default. Your memo is encrypted, so no one can see that. No one sees who you sent the funds to. And yet the people who you sent the funds to know who the funds are from. So it gives you the ease of use features without compromising the other aspects of your privacy.
There's a blockchain, right? Is there a blockchain?
This is all based on a blockchain, yes.
How does it put those privacy features into the blockchain? I'm still having trouble understanding it.
At the risk of getting too technical, it essentially uses a elliptic curve Diffie-Hellman to derive the key using hierarchical wallets. Now, see how technical it gets very quickly.
Yeah.
To generate a new private key. So when you send the funds to someone, you give them a means of generating the private key using a shared secret that only you and the other person knows. So the key is not known in advance. It's generated at the time you send it. It uses a similar method to how BitMessage allows you to send messages privately to people. So it's kind of like BitMessage meets transactions.
One of the things that eventually we get to with Bitshares is what you actually want to do with it. You mentioned other chains, other DACs, and the one that you mentioned at the very beginning of this episode was BitUSD. Recently, we've seen another type of token-based US dollar abstraction be proposed, where essentially it is a redeemable one, where the dollars are kept in a bank someplace and you can redeem the token through a slightly difficult process. But what you're working on, first off, you were working on it about a year now. I think this was actually the first project that we started talking about back last summer. And secondly, it's not a redeemable asset. So can you talk to us about BitUSD, the use cases that you see for it, and kind of just a high-level view of how it would work?
Well, BitUSD is redeemable. It's redeemable for a variable amount of shares in the DAC. The amount of shares you get when you redeem it is proportional to the value of the dollar. So it's redeemable for $1 worth of Bitcoin. Or if this was on the Bitcoin network, it'd be like creating an asset that was redeemable for $1 worth of Bitcoin. That might change from day to day, but when you go to redeem it, you always get $1 worth of Bitcoin. And the way that works is the same way that dollars are created in the regular banking system. Dollars are lent into existence, backed by collateral. In the case of the current banking system, the collateral is your house. In the case of our system, the collateral is shares in the DAC itself. And it implements automatic margin calls so that if the price moves against the person who is effectively short, they borrowed and sold. And so it forces them to cover and buy it back from the market. And that creates a peg. And the market peg works on the premise that all market participants buy and sell based upon what they think market participants will be buying and selling in the future. And the only rational choice is to assume that they're going to trade based on the peg in the future. Because if you don't believe that, then you have to decide, well, which way is it going to go, up or down? And if you don't have a way of saying, you abstain from the market. And if you don't think it works, you sell the shares and get out because the system's going to fail in the first place. So it's a self-reinforcing market peg that causes the asset to always have the purchasing power of a dollar.
This is one of those elements that can't really be tested until after the system that you're creating is in place. Is that right?
It is a bit of an experiment. It's an experiment that a lot of people have a lot of confidence in, just from thinking about it in an intuitive sense. But markets are markets, and it's really hard to predict how humans will behave en masse. Ask any economist. I have, worst case scenario in the system is you have to add a trusted price feed to settle it, and then it works just like a prediction market. And the hypothesis that we have is that the price feed is unnecessary. We have a algorithm and various rules in place to prevent common manipulation, eliminating front running and other attacks. Also, because we have user issued assets, it's entirely possible for you to do effectively IOU dollars, Ripple style, or like this other process you described, where you can redeem it from someone that you trust to hold real dollars for you. But the bid assets, the market pegged assets, are the big feature that everyone is most excited about. Now that we've got the foundation in place, we've got a consensus architecture that can scale to handle these transaction volumes. I'm very optimistic about where we're going to be in a month or two from now.
So in the last, 8 months, you will have issued 2 new types of tokens. Issued the proto shares at the beginning, and now Bitshares at this later point. Now that you have this basis level, I'm not asking for specific dates. I'm asking for, do you have any sort of anticipation of the pace that we'll see new things coming out? Do you think we'll see 6 months between projects, or is it going to be shorter, longer?
Things are going in parallel right now. We've got one team working with a company called Follow My Vote, working on a voting DAC. That's really exciting. Another one working on a DNS DAC that's using auctions for that. Bitshares Music's also being developed in parallel. I would expect that you're going to start to see an avalanche of many different DACs, possibly as many as 6 out by the end of this year. Of course, that's all subject to development and unpredictable circumstances.
And will other people outside of Bitshares, the company, have the opportunity to develop DACs for the platform?
Bitshares, the company, only produces the toolkit. Every single DAC that is released is being released by another company, not by us.
Gotcha.
You guys started basically the first crypto equity back in November with proto shares. And this was, again, before this had really been conceptualized that you could have something that could, a token that you could acquire that could then give you another token at a later point as a sort of reward. So again, it kind of looks like some sorts of legal structures. I know the words that you guys have used have changed from shares, and we were talking, and you're using the word shares now. Can you talk about the legal environment and how it's changed and what it, and what that's meant to you over the last maybe 6 months, 9 months?
The legal environment is a mess for everyone in this industry. Things that seem to make sense, like it doesn't matter what you call it, matters what it is. It actually seems to be the opposite. Of course, it's different at the federal and state levels. End result is we're trying to structure everything we're doing to basically divide the responsibilities and protect everyone involved. We produce open source software. We don't operate any DACs. We just provide the software that makes it possible. That's like creating a generic exchange. You don't run the exchange. You provide the software to the exchange. There's a different legal standing you have between those two things. And then we allow other companies, other individuals, or just random people on the internet to take the source code and use it for whatever it's good for. That's how we've protected ourselves and also our users and the people who are using it. Now they can be more protected as well because we'll be able to continue to develop and enhance the basic toolkit upon which their technology is based. Whether you call it shares is a very useful way of thinking about it abstractly in economic terms for evaluating the design and of the system. But our voting DAC, we're probably going to call them votes. There's been discussion of calling them notes in the music DAC. It doesn't really matter what you call them, different things, because they're not exactly shares like in a traditional company. On the other hand, There's companies out there like Overstock that is looking to actually back their corporate stock with these things, and it would be accurate to call them shares at that point in time. People want to use this stuff for that, and in fact, our toolkit could eventually be adapted to provide an alternative accounting mechanism for a centralized entity. You can hard code the regulations the government requires into the system as well. It's really a generic technology. What's being tracked, whether you call them votes, whether you call them voice or notes or tokens or coins, you call them whatever is catchy and good for marketing and avoids legal entanglements.
Yeah, it seems to be the problem. Nobody really knows how to avoid legal entanglements, but I have to say, I do like your approach. We'll see how it shakes out, I guess. There are some other crypto platforms, I think, that maybe seem to want to be like the blockchain of everything. And I'm just wondering, like, have you ever heard the phrase tyranny of the code? You know, how far does reputation go in the Bitshares platform? How do you protect against sort of tyranny of the code?
I've never heard the expression tyranny of the code. The main thing that I've come to understand with all these technologies is the code is just an expression of a consensus of a user community. It's a way of keeping score. The true consensus is in the intent of the users and not the code. And the main way that you prevent the real consensus among the users from being co-opted and turned against them by a minority is to remove barriers to entry. As long as it's very easy for the users to fork the code and cut out the players that are trying to censor transactions or shut down the system or change the rules in a way that violates the social consensus, the system will continue to grow and flourish, and you're relatively secure. And that is where the true consensus is. If there is a bug in the code, everyone's going to follow the chain or follow the correction that honors the original consensus as it was intended. And very few people will say, well, technically this is a longer chain and therefore it is the one true system. I believe people are smarter than that. That's the real power of these systems.
Maybe you could give us a roadmap, because I know a lot of things have changed at Bitshares, and it's an unpredictable environment, of course, and you're trying to get stuff developed. But what do you see happening with Bitshares over the next month, over the next 6 months? Like, paint a picture of what you think is going to go on and what we can expect to be able to use.
DAX Unlimited is a company in China that's going to be launching Bitshares X, BTX. It is currently trading on Bitter and Cryptsy based upon the February 28th snapshot. And I would expect that over the next couple of weeks that they will be releasing a client for users to download and actually start trading. And on that client, users will be able to create accounts, do user issue assets. And the plan, I believe, is to do a hard fork shortly, within the next couple of months that fully implements the markets and bid assets. That might be ready from day one. It's all up to them to decide which snapshot they want to do. Do they want to delay the release and include more features, or release now, get trading going, and do a hard fork in a couple of months to upgrade the system to the full potential? But either way you look at it, we have a product that you can use and try today. We do continual dry runs on our test network that are open to the public. Anyone can participate in. If you'd like to see what our wallet is, if you'd like to experience Titan or the joy of 10-second transactions, it's a very different experience using our wallet compared to everything else out there. You can visit bitsharestalk.org. There's a thread on there for various dry runs that we're doing. Post a question if you'd like to know how to get involved. If you'd like to learn more about us, you can visit bitshares.org for a high-level overview of what we are doing and what our vision is.
And just as a quick final note, you trust DAX Unlimited. That's a company that you're aware of. They're not just a random company that's going to be releasing your code. Yes,
it's run by people I trust.
Do you have any concerns about that? Because the model that you're going forward with basically says that anybody can take what you're doing and do anything with it. So so basically you have partners in place that make it so you feel like they're trustworthy people handling these responsibilities, because it is a responsibility.
It's a responsibility. It's an opportunity to start a new business. So we're creating jobs for people. We're sharing things. We're trying to be as decentralized as the system we are building.
Thanks for listening to episode 129 of Let's Talk Bitcoin. Content for today's show is provided by Adam B. Levine, Stephanie Murphy, Andreas M. Antonopoulos, and Daniel Larimer. This episode was edited by Adam Levine. Music for today's show was provided by Jared Rubens, Matthew Murkowski, and Gertie Beats, straight from the street. The 5 forum post promotion still has one more weekly distribution. You've got 4 or 5 days left to get 5 posts on your LTB forum account to split your share of the 2.5 million LTBC remaining. So sign up and get posting today. Have a good one.